Hey, everybody. Happy Saturday. Hopefully, you're enjoying a nice Saturday afternoon. We had a stupendous rally yesterday. So maybe it's you got a little more pep in your step today. And we're able to buy a few extra things at Home Depot. Or if you're going out, maybe you got if you went to the ball game, you got better tickets because you made so much money yesterday. Whatever you're doing, I bet it's just a little better knowing that you made some money yesterday. This stream, I'm joined by Scott with Scott's Due Diligence. How you doing, Scott?
Good. See ya. Good. Thanks for having me on.
Yeah, great to see you. As probably most everybody knows, Scott has a channel on YouTube. He's been making videos. How many years have you been making videos, Scott?
May 2020, so a little over 5.
Excellent.
Maybe 5
And
and a half. Yeah.
thank you, by the way. I probably I have to say I've viewed at least 500 of your videos.
Appreciate it.
So I'm glad I don't have to pay you for each video. Like if I had to pay you $1 for each video, I'd have to write you a check for like $1,000. So thank you for all the hard work that you've put into it. And I kind of got a little inspiration of doing my channel from seeing that what you were doing. I thought it was great that somebody was going deep into financials. Somebody was looking very closely at fundamentals, which in a way is unique out there. It's like not every channel will go very deep.
No.
They talk stories and they talk about the story for the full length of the video, which the story is the easiest part. Like, hey, everybody's buying, the data center is growing. Okay,
right.
Got it. I could have figured that one out by watching business television. Not a hard one to grasp. But which data center companies are worth having based on profits and cash flows? That's where you went deeper. And I'm like, yeah, this is what I'm talking about. I like getting deeper with, I guess experience in education. I'm an accountant by education. I worked in corporate accounting. I went into the software business because I really enjoy software and there was better money to be made, frankly. So I've had an experience to go across many different industries helping companies with software. So when I saw your channel, I'm like, yeah, that's where we want to go. We want to dive deep. I created my models because there wasn't anything out there that could follow my thought process. So I'll just create my own. And I created my own. And that's what I'll show today. Yeah. So it looks like we've got some people. We're getting a lot of people on the stream. Saeed, great to see you. Thanks for joining. Looks like Duad, very good to see you. Thanks for joining. And if you'd like us to look at a video a stock, if you're a member of my channel, a paid member, that's like part of the membership. If you're not, a $5 super chat, and then we can take a look at a stock and we'll go deep dive. We'll look at full fundamentals, cash flows, and earnings per share. At least that's what I'll look, and Scott can comment unless he's got something that he wants to share. But we do have a couple of stocks that we wanted to jump into to kind of get things started. We're going to look at Meta Platforms. We're going to look at NVIDIA. We're going to look at United Healthcare. And we're going to go through it probably at a in-depth pace. So I'm going to go through, look at Meta. We'll talk about the big picture of Meta. We'll look at what the business prospects look like for Meta, who their competition is, what is the risk out there, what could happen that could be ugly and bad for Meta. And then we'll look at valuations. Where do we value Meta today, and what's the future prospects of the stock? And then I'll put it out there and say, what do I think is going to happen with Meta? And we'll see if Scott's has an opinion of that type as well. So Carlos, good to see you. AB Ba, or is it Abba? Good. It's great to have you. Thanks for joining. So everybody knows what Meta is, who they are. They have Facebook, Instagram, WhatsApp, and they now have an AI app. It's Meta AI. And they have more than 3.4 billion people every day logging into a Meta application, which is quite incredible. And their stock's doing well this year. It's up 28.9%. This is my biggest holding in my portfolio. And Scott, you're a pretty big stockholder of Meta, right?
Yeah, yeah. And in terms of largest, it's up there. It's one of my bigger ones. Exactly, because I've been pro Meta since they started trading, and I was thinking, because I remember when in 2012 or 2013, I remember I had this thought process. I want to just load up in Meta, and I didn't do that. I bought some, but I didn't like put it all in. Like I was gonna put a ton in, and I'm like, why did I do that? Why did I change my strategy? And I made a huge blunder. I think in 2014 or so, 15, I hired. I don't know why. It's so stupid I did this, but I hired an investment advisor to manage my portfolio, because at the time, I mean, I was early 30s. I was pretty comfortable with the market, but for some reason, I had this thought process that they knew more than me, and they could do better. That was the biggest mistake, because I would have had a ton of money, because if my strategy was to load up on Meta and my number 2 was Costco, and but I let them. They didn't even beat the market. So right. I'm not saying avoid these people, because it might help some people, but if it's between doing a financial advisor and putting into S&P 500, put into S&P 500 and let it ride, or a large index like that. Of course, people make mistakes. I have had friends who also worked on Wall Street, and they made stupid decisions, even though they knew what they're doing. They would pull out too early and they lose money. So they had somebody else manage it, if you can't control yourself, let someone manage it. But I recommend don't do a financial advisor and make that mistake I did.
So I'm going to double down on that. I'm going to give you my experience, which is different, but with the same outcome. So, like you and many others, right? I worked for my money. I worked hard for it. I worked hard to get my accounting degree, and I worked really hard in corporate accounting. I worked hard to learn the softwares that I have quite a bit of knowledge in. So when it came to my investments, why was I like going to just say, oh, where's the easy button? Oh yeah, just stick it over there and it should be easy. So, I was investing in individual stocks and mutual funds. I was investing in real estate, and I'm like, you know what? I bet, because, going away from stocks, right? Like I rode mountain bikes at a very high level for a long time. And I went to one of the most treacherous, most beautiful places you can ride, which is Whistler, Canada. And in Whistler, Canada, it's beautiful. You may have skied there, a mountain bike there. And it's a great place to ride, but you can really get hurt. So I hired a guide, and it really worked out. He knew where to go. He showed me, and he showed a group of us, where to ride. We had an awesome experience. So I thought, I'd like that experience for stocks. I want somebody who really knows their stuff, who can just make me better. And I went to an advisor. I was paying about $10,000 a year is roughly the fee, which I'm fine with. If I spent $10,000 and got $50,000 of value, where do I sign up? Sign me up. So the thing that he first said, you got to get out of individual stocks and get into all these mutual funds that I like. And I'm like, okay, so why do you like that mutual fund? And he was put off by that question. He's like, well, just because it's good. And it's like, okay, well, with all due respect, why is it good? I'm not asking questions because I'm a annoying person. I'm asking questions because I've built things that I've built in my life because I've always learned. And he was really put off by that. So then when we'd get into investing, it wasn't necessarily, I wasn't trying to be a jerk about it. I just wanted to have a solid conversation around why, So long and short of it is, it was a successful failure. I learned that, for me, and again, everybody's different. I can't depend on others to build wealth. In some
No.
ways, I want to collaborate with others. I want to partner with others. I've been a leader and I've been a follower. If we're going to accomplish a goal together, awesome. But I cannot depend on somebody who treats my capital as just one more action item on their schedule. It needs to be like, for me, I make a substantial amount every year now. Okay. And if I keep getting better, I'll eventually make $1 million a year. Okay. And that's probably in the next 5 years. I will make that kind of gain per year. So I got there by learning and learning and learning. And the event of hiring a wealth advisor was a successful failure. It taught me that you need to go learn, you need to go master this. And that's when I, hit the books a little harder. I started investing on my own, started watching YouTube, and I found you, I found others, and I found Pat Dorsey, which I've gotten a lot of value from, and away I went. And I've made some mistakes that cost me money. I like to say that I paid for those lessons, and I've made some money on some stocks. And I like to say, I enjoyed the ride. I invested in Bitcoin. I wasn't the earliest investor, but 2017, 2018, I've done great with Bitcoin and Ethereum. And the advisors would have said, "You're crazy. Why would you buy into Bitcoin? It's a crazy idea." And I would say, well, maybe it is crazy, but what if it works? Then it'd be a crazy return. And that's now the number one asset class over the last 10 years has been crypto. A lot of people hate crypto, but look at the scoreboard. Number one asset class, cryptocurrencies. And stocks get a lot of press, as they should, especially the really good performing ones. So it's interesting that you had that experience on Meta specifically. Meta provides a lot of lessons. First, thanks for volunteering that lesson, which is, man, if you can find a small cap at the right time and then ride it, you can your money, you'll multiply your money times 20, 30, 40, 50, which is exciting. That's one lesson. The other lesson is when everybody doubted Meta back in 2021, 2022, and the stock sold off to 85. You remember that?
I do, very intimately.
So much negative news. And news is not fundamental analysis. News is just stories. And again, stories we can understand clearly, like, oh, okay. So what's going to happen to Meta? Oh, they're terrible. The metaverse is collapsing. They're going to be the worst company going forward. Wait, what about Facebook? It continued to grow. What about Instagram? It continued to grow. WhatsApp is such a great service. Do you use WhatsApp?
Not much. I have used it, but I don't use it that much. Do you?
I do. Here's a funny side note is, so I'm on the road and I call my wife on AT&T, and we get bad connections from time to time. And I was in the state of Texas. So every time I called her, it'd be like just a terrible connection. I'd be on some type of digital network. I'd go to my WhatsApp application. I'd call her over WhatsApp. The call was crystal clear. Every single time our video calls were crystal clear. So you have a free app that gives you a better experience than what I would pay for with AT&T. So that's WhatsApp. And that's why over 1 billion people on earth use WhatsApp every day to make calls, to communicate with one another. And now Facebook is beginning to monetize some of that traffic on WhatsApp. So that's exciting. So the move from the low point on Meta, lesson number 2 is, if you believe in a business and the majority of the market doesn't believe in the business, stick to your guns, keep doing your homework, keep doing your research. I never heard you doubt Meta. I never doubted Meta on my videos because I was already making videos at that time. And what I was thinking is, why is the market so crazy? I mean, the market was doubting a lot of great businesses, and I'm like, that is just nuts. And now the lesson is opportunity will knock on my door, and it'll be kind of a Halloween situation. It'll knock on my door. I'll answer the door. Opportunity to be dressed like a really scary character. But instead of me giving it candy, it's going to give me really good buying opportunities, potentially in stocks that really do have very good fundamentals, very good businesses that have a bright future. But I just need to understand the markets get really emotional from time to time, both going up and going down. And that was the case with Meta. I did buy some shares. I'm a dollar cost average guy. So I bought shares. I kept buying and I kept ignoring, and it's been a great stock. So Meta.
Yeah, it is. The problem is when a market goes down, our portfolios go down, unless you're sitting on cash, which is probably not the best thing to do. But it would have been a good time to sell out of other things and buy into Meta, but you just don't know the bottom.
All right. There's a lesson
but
there.
I didn't sell my Meta when it went down.
So it's what did I do to create capital? So I invested in some real estate. It did well. I sold one property at the beginning of 2022. The stock market was collapsing, but real estate was still flourishing. I bought a property and it had really done well. I bought it for 325, sold it for 980,000. And keep in mind, when you buy a property, you don't put $325,000 down. I put roughly $75,000 into the property. It was cash positive each year. So I got well over 600 grand out of that transaction. And that's what was the capital that I was able to put into the market in mid 2022. That was a good decision on my part. And that property now, I sold it roughly for $1 million. It has lost a little bit of value because I track it just to see where it's at.
It probably makes you feel good though when it goes down. Like you're like, oh, thank God I missed. Thank God I didn't wait and sell it now, and I sold it then.
Yeah, it was a good move, and that capital, is really working well. And I'm glad that I put it into some good stocks. I put it into Meta, Google Alphabet, some Amazon, and as well as some others. So let's go over. So before we go into valuations, let's talk about Meta. What are the threats to Meta? What things do you imagine could come up or already exist that could push Meta back, hold Meta back, hurt Meta?
The tariffs, I guess, is although I don't think it's as bad as people think, but there is that risk. There's a lot of competition. They're not the only company pouring tens of billions into AI. All the other big players are. So there is major competition. I guess the biggest threat, come to think about it, is the U.S. government thinking that they're a monopoly, like antitrust, because they're a good company. They have a lot of cash. They're very profitable, which is what you want in a business. But yeah, I don't think that would happen, but you never know because the government broke up AT&T. I'm trying to think of other examples they broke up. It was GE. They broke up GE, or GE did that on their own. That was recently, right? But I don't know. They're one of the leaders in terms of like this. They in the internet game, they were leader, and they stayed that way, investing in the future, getting the best people. So I'm staying with them. I said that for a while. I've been saying that since they IPO'd in 2012, but I had my channel in 2020. I've been promoting it. You could watch my 20, 30 Meta videos I made. I say that they're my main stock. So yeah, But in terms of the disruptions, there will be disruptions. The stock may hit 600 next year. I don't know when the market will crash or when things will pull back, but that's how it is. They crashed down to 85. They went up to like 300, came down to 200. Went, that's just how the market is. So I'm not really worried about those short-term disruptions. What do you think about what could affect them? The big threats.
When I look at the big cap stocks, right, the top 10, I'm going to use a different company to illustrate the example, and then come back to how Meta doesn't really have a big threat. Okay, so let's talk about Microsoft. It's the second most valuable company on the planet, and it's publicly traded. But the threat is like their apps business. Well, Google provides really good apps now. Google Sheets, email, calendar, and Microsoft has like video conferencing where you got Google itself. And then you go, well, Microsoft's got its cloud infrastructure business. Yeah, but AWS is bigger. Amazon's huge, big competitor. Google is really successful, and they have a Google cloud infrastructure business. So Microsoft has clear competitors. So if they can't screw up, they have to just constantly get better in all their businesses. And I would say that their application business and their software business is getting old. The new generations are using more open source and so forth. So that's where Microsoft clearly has competitors present and risk present. When I look at Microsoft, I'm like, all right, Microsoft has Snapchat. Right. Like Snapchat's nothing. It tried to be a competitor 15 years ago and it failed miserably. I would say that the TikTok experience, that was a threat to Meta because it took so much mind share of people. And Meta responded with its short form format. And it ended up being that TikTok was a greater threat to YouTube, as well as eyeballs away from Netflix and other places. But that was probably the biggest threat to Meta was TikTok. It was like, well, if eyeballs go to TikTok, Meta's going to have less eyeballs. But actually, Meta has grown its number of users. Viewing time is off the charts. Its advertising business is great. Advertisers love it because they know they can get the demographic data on, hey, I want to advertise to men that are between the ages of 30 and 50 in these zip codes, these areas. You can be that precise. You want to advertise to women, knock yourself out. Meta's the best platform for that. So advertisers love it. So I don't have a clear competitor, which is great for stockholders. It's like, great. Meta's got this path forward. And then we talk about AI. We are imagining that AI, right? Let's go to, I'm going to open up Gemini. Here's Gemini. So here's an AI experience, right? So in here, we can say, let's see if Gemini knows you, Scott.
There's no way.
Yeah, man, you're famous, buddy. You're in there.
Wow, I made it. I made it.
You're in. You're on the radar. But this is the experience of AI. As we know, this is a general purpose application, and there'll be more applications like this. Well, this experience can be easily introduced by Meta through Facebook, Instagram, or WhatsApp. Is if people have questions, and I've already been presented with AI options within my Meta experiences. Now, they have 3.4 billion people accessing a Meta app every day. Well, Meta's got this huge advantage. Hey, I can market my AI app to 3.4 billion people every single day where ChatGPT is like trying to build their user base the old fashioned way. We're brand new and we got to build it from the ground up. Google also has advantages because they have search and they have YouTube and they have Gmail, and they're in their phone business. Like I own a Samsung device with Chrome, or excuse me, Android on it. It's got their AI stuff all over it now. And I just got the phone a couple months ago. So I think Meta's opportunity within AI, if AI ends up being this big thing like the internet was, Meta's got a front row seat. It's got advantages that it could really take on, which, and as we saw Meta bought or hire this really expensive talent, I don't think anybody was against that. I was for it. I'm like, good, go hire the best, build the best AI applications and build that business, because you're just going to make Meta, instead of it being a close to $2 trillion market cap company, it'll be worth $4 trillion if you pull off the AI business.
Yeah, absolutely. And you also look at, like, when someone does an analysis, especially a company like Meta, like if you did an analysis on a small, like localized company, like a supermarket, obviously a supermarket could only reach within maybe 20 miles of that supermarket. No one's going to drive hours to a supermarket. But when you look at Meta, you have to look at worldwide population and look at how population is growing. Like 70, 80 million people are added each year. So those, as the population grows, it just adds more potential revenue to these companies, because these companies like Google, they have worldwide reach. Every country uses their product pretty much.
You're so right. WhatsApp is an app that it took off in Latin America like crazy. Like everybody in Latin America, Mexico, Colombia, Brazil, they use WhatsApp. It's like the default app for them. But in the States, not everybody used WhatsApp. And that's interesting that they were able to get that kind of adoption outside the US.
They're still growing pretty much all over, for the most part. In the US, they're growing at a pretty modest pace, but they still grow fairly aggressively in Asia and South America, it seems. It seems like we're always, at least the US seems to be 10 years ahead of most countries in terms of like technology and stuff. But they're catching up, as you can see in the market caps of other countries, how other countries are growing quite a bit the past 20, 30 years.
Yeah. So here's my valuation on Meta. Looking at their cash flows, I use their trailing 12 months. And initially, I'm growing it by only 10%, even though their growth rate is 20% on revenue, because they're spending so much money in the data center and trying to get the AI business going. And then I grow 2, 3, and 4 years, 2, 3, and 4 by 20%. And then I think their long-term growth is going to be very good at 5%. So overall, I think Meta, as we sit right now, I think is discounted by 26%, which is a combination of their earnings per share valuation and their free cash flow, future free cash flow valuation. And that's a pretty good discount for a company that has such a good position for the future. It's like, this is one that can continue to go in the right direction. Do you happen to remember what your last valuation of Meta was, or do you have access to it?
I could pull it up.
While you do that, a couple people joined. Tomas, he wanted to know, are we in a bubble? And so I don't think we're in a bubble. I think within some industries, I could say some of those stocks are priced way too high, and we'll see if the market we'll see how soon the market corrects those, or if those companies have incredible fundamental growth, like they grow their revenues so well. Like Palantir is a good example. If you looked at the Palantir numbers 2 years ago, I mean, I looked at them and I go, why is this stock price so high? And they continued to accelerate their growth. Even though we're getting bigger,
Yeah.
their growth rate was getting higher, which is supposed to go the other way. When you get bigger, your growth rate goes down. Well, that was incredible. Their profits are great and have become more profitable. So if a business does that, yeah, they'll grow into their valuation. But some companies do seem priced too high, especially around data center.
Yeah. And being in a bubble, if you think about it, I mean, I don't think of being a bubble is as bad as people perceive. But if you think about it in theory, if we're at the very end of a bubble and you're 70 years old, that could be a problem if you have everything invested and you're 70. But we could be in the beginning of a bubble. I remember in like, what was it, like 2012? Because it was 2008 was like the crash. Stocks went down like 35, 40%. And it took a while for the Great Recession to recover, like almost 2 years, I think. And then from 2010, it was almost a decade that everybody, that's all I heard. Oh, we're in a bubble, we're in a bubble, we're in a bubble. But it kept going up. So if we're in a bubble and for 4 years, what are you going to wait for the market to triple in 4 years and sit on cash and then wait for it to go down 30%? And so it's fine being in bubble if it is. If you're really old and you're retiring, but you just got to invest, and then the market always rebounds. So I wouldn't worry about all that noise and listen to other people.
Yeah,
I lose a lot of money.
I agree. I think the Magnificent Seven or the big caps, pick the words you want to use. Saeed is saying that, we are at the February 2025 position. Yeah, we are, in a way, some of these big caps, they just continue to get more capital. Nvidia, Microsoft, and Apple, not so much. I think Apple's kind of, if anything, going sideways. But Meta, they continue to just get more and more investors, and it's really worked.
We are at February 25. No, why are we at February 2025? Because the S&P 500 pretty much hit its all-time high recently. It's 645, the S&P 500. In February, it was like it was 600. Are you looking at a different index than S&P 500?
No, you got a good point. I mean, February we were at 61.44, and now we're at
if you look at one
64.
stock.
I mean, we're up 5% from February 2025. So I think more generally we hit the previous high in February, and then we had that big sell-off of 19%. And you're right, we are above the previous high in February by 5%.
Yeah, if we were April, May, we were doing this, then yes, February was the peak, but it's come back. But this is just how the market prices things. If you notice, the huge companies get larger. There are some that fall off, but generally those are the companies that hold up the market. It's always been like that. And it's even more so now because the market's bigger than it used to be. But if you go back to like 1960, 1970, and you look at the top 10 companies, that was like 10% of the market, even though they were only like 50 billion market cap back then. But the other companies, so now the top 10 companies just drag the market up, and those smaller companies, they just go out of business generally, for the most part. That's why people lose money in the market, because they put all their money into these risky stocks and lose all their money trying to 100x their investment.
Yeah, good point. All right, so on Meta, I had my valuation pulled up. Just to kind of finish off on Meta, did you recall what your last valuation looked like for Meta?
I couldn't find it in my file.
No problem. All right. So, that's my evaluation. I did it after the last earnings. So last earnings are baked into this, and it'll be 2 months before we get new fresh earnings. All right, so that's Meta. It's one of those stocks that I'm the other decision I had to make recently, right? I think I'm sitting on a really nice gain with Meta. So do I sell some Meta shares? And I went through the thought process. I was beginning to convince myself that that might be a good idea. And then I decided against it. I'm like, no, I'm just going to keep it. If back to the financial advisor, I'm sure a financial advisor would be like, no, you got to diversify. You can't have a position be that much, you knucklehead. And I'm like, well, yeah, but I've done really well with it. I think it's going to continue to do really well with it. I really believe in the business, so I'm going to stick to it. And for better or for worse. And I think it's going to be for better.
I mean, it's so unlikely. It's like, yes, the world could end tomorrow. Anything can happen. But companies this big generally don't go out of business unless they do something like fraudulent, like an Enron or a company that people don't know was doing illegal things. But when you grow to these levels, it's hard. You could be a small company, especially not a public company, privately owned company, and do a lot of illegal stuff because people aren't looking at you for the most part.
Yeah.
But when you have 1 million eyes on you or 1 billion eyes on, it's hard to. So, but so what's next, Doc?
Yeah. So we're going to look at NVIDIA. And before we jump off, I'm just going to answer one more question. It looks like Carlos, Meta had some freezing of AI hires. I'm not sure where the story's coming from, but I can tell you that they've spent a lot of money hiring some of the best talent in the world for their AI business. So if maybe they had a data center close, like, hey, we're going to close the data center in, I'm just making this up. We have a data center in Kansas City. We're going to close it because we have a data center that's starting in Virginia. Well, yeah, you officially reduce your headcount for AI, or I guess your data center operation, but it may just be an adjustment. I think overall Meta is in on AI. They're spending, I think, all the available capital, and I would say, and then some on AI. So I think they're betting big on AI. All right. Yeah. So the next one we're going to talk about is NVIDIA. This one is this is a monster that came out and just incredible rise in the stock. And it began to really lose some value in 2024. I mean, it came down nicely, 36%. And then it just took off. Oh, man, up 88% from that low point. And NVIDIA is selling GPUs into data centers. And these data centers predominantly are catering to the AI build out for large language models and companies that want to have their place in the AI paradigm. Now, a couple big high questions, right? Like high end questions, because I look at it and I'm like, right now there's like the big AI businesses out there are OpenAI, Microsoft, Google, Amazon. They have their cloud infrastructure business. You have Meta. You have DeepSeek in China, Alibaba in China. And you have Perplexity, and you have, I'm probably missing a couple, but and X, or Grok, as X calls it, and Musk spent a lot of money on AI. So pretty soon we're up to 10, 15, 20. Well, back in the internet days, remember the search engines? You had Lycos, you had Ask Jeeves, remember those days? Yep. AOL.
Yahoo.com, yeah.
It was a fragmented market until Google search came out, and Google Google took over based on two things. User experience was far simpler. They didn't put a bunch of advertising like everybody else was doing. And second, their search algorithms were far better. So people are like, okay, Google search is the king, and they crowned the king, and Google search did great. So back to our current position with AI, I don't foresee that we're going to have 25 different AIs out there. Like, oh yeah, I use OpenAI when I want the best data for home improvement, and I go to Gemini when I want my best data for healthcare, and I go to Meta when I want my best data. No, you're like, I want one, just one. I go there and I ask all questions. So there will be some kind of consolidation in the future, but for now they're just trying to battle it out, and everybody's trying to get a piece of the share or the market that's out there right now, because it's supposed to explode. What's your expectation there, high level of this market? Like, how far is this market going to go with regards to AI and AI businesses?
It's going to be big. I think it's kind of like similar to when the internet came out. Like, people like, it's cool, but I mean, do we really need this? Like, how's it going to make money? And who's even making money? Like, so it was a lot of, so it turned out to be huge. In hindsight, it's like, obviously it was important, but at the time, I remember when I was using it like an encyclopedia. Like, I remember in high school, I was showing my mother, I'm like, what do you want to know? Tell me anything in the world that you want information on. She was actually annoyed. She was like, well, what are you talking about? I want to watch my show. Stop bothering me. I'm like, just come on, look at this. This is crazy. I know. So I showed her, and I'm like, I click on the search engine and wait a minute, and then click on the next thing, wait a minute, because it was dial up. So I do think it's going to be huge and big, but every industry is like this. Even if you go back to like when cars came out, there was like many companies that built cars. Like, there was so many companies that wanted a piece of the market. Correct. But yeah, only a small handful are still around. And there's always new ones coming in and out, and there's always going to be small players in every market. If you look at it, companies that sell any product, everybody wants a piece of the action, but the cream rises to the top. So yeah, there's going to be like most markets, there's going to probably be 2, 3, or 4 that control the market, that have a 60-70% share. There'll be a lot of small ones. The hard part is if you knew like GM was the pick for cars in like the 30s and 40s or whatever it was, who knows what the future is. I wish I knew Google was going to be as big as it was when it came out. But who's going to be number one? I think the companies that have all the capital, but there could be a new one. I mean, Nvidia, who saw that coming up to 4
back
trillion?
In 2001, I asked Gemini, what were the top search engines? Google was already out. They were founded in 98. And Yahoo, that was one of the top ones. And Yahoo at one time was pretty valuable. Alta Vista, remember that company? Lycos had the dog. Remember that?
Oh, yeah.
As a mascot emblem. And then Excite, never used Excite. Ask Jeeves, I did hear about it, but I'd never used it. So now these guys don't exist. They may still exist because, 5 people use it. Excite, and I have no idea if it exists.
There was another 100 more.
Yeah,
I guarantee.
Before that, let me change the date. Let me go.
Even in 2001, there was 100 more. These are just the largest. There was so many because everybody wanted to, but they're not going to list every single one.
Well, let me go to 1995. That'd be better. And because that was before Google search.
Search engines.
So Yahoo, Alta Vista, Excite, Lycos, Web Crawler. How did that name not make it? Web Crawler, InfoSeek. Other notable players: Metacrawler, Magellan. Remember Magellan, the ocean explorer. So, so this market, if you would have bet like in 95, oh, Yahoo's going to be the dominant company of the future, they're going to dominate, you would have been wrong. All these would have been wrong because these ended up being taken out
I
by
would
Google
pick
search.
AOL. I was like, AOL has to win because everybody's using it. When AOL came out, it was no one's ever seen this, like communicating to people in real time from all over the world anonymously. It was just such a cool concept.
Yeah. Email was kind of a head exploding experience, which was, we can email each other, we can communicate, and corporations got email going. I mean, that was a interesting time. So let's go back to NVIDIA, right? The biggest, I mean, the hardest question to answer is, okay, what now? Does it go higher? Does it go sideways? Does it go lower? And we're investors, right? Do I buy into NVIDIA right now? We're ahead of their earnings. Their earnings are going to come out on Wednesday. I'm going to do a watch party on my channel. I'm going to have a co-host, Daryl, who does charts. I don't know what you're doing Wednesday, Scott, but if you'd like to join us, open invitation to you.
Okay.
We're gonna watch the earnings drop. We're gonna analyze it and go through it. But right now, is this a buy, hold, or sell? I don't know if you have any analysis on NVIDIA, but let me give you the floor. You tell me anything you want to tell me about NVIDIA.
Well, once you like these types of companies, like it's like Meta too, you get into a realm where you can't really. It's hard to predict on previous cash flows, even though there's just so much speculation on the future. Who would have thought there? I mean, when I was a kid, who would have thought there'd be $1 trillion company? Now there's $4 trillion company. So I don't see a reason why it wouldn't go up. I don't see any. I mean, there's going to be pullback at some points with the market, but I think it. I mean, I'm bullish. I used to be bearish because I didn't get it, but I just don't see anything stopping them, especially with the AI boom. I'm not buying it, but so I mean, I regret it. I feel stupid for not buying it. I mean, I bought Meta. I'm up a lot on Meta, and I bought all the stocks that I'm up a lot on. But I don't know. I don't see anything stopping them, even though semiconductors has been a cyclical industry historically, and semiconductor companies aren't meant to go up. They're meant to. It's just an industry, but times have changed, I guess. I mean, Intel used to be the king, right? In the year 2000, they were bigger than the next 5 semiconductor companies, and then you fast forward to 2022, they were still close to the top. Now they're like way down there. They dropped a lot, so I don't know.
Yeah, I mean, the revenues. One thing that either held me back or it's so there's. I was telling a friend of mine, actually, I was talking to him this morning. I saw him. We caught up. He bought Palantir. I think he said he bought it at like $7.80 a share, and Palantir is just killing it, right?
Yeah.
And he's older than I am. He lives in the same town that I live, and we've become really good friends. A friend of mine introduced me to him, and we've been really friendly for a long time. So he said he bought it at like $7.50, and he liked the story of how it was their use cases were successful and they were broadening out their market. And he bought it, and he bought big, and he has done really well. He's already milked so much cash out of the stock, and he just killed it. And the conversation that I was having with him was, it's, you have stories that last a long time, but who knows how long it's going to last. In the case of Palantir, they're not only do they have a great story, but their fundamentals keep getting better. Like I was talking about how when businesses get bigger, their growth rates are supposed to come down because you're getting bigger. This growth rate's supposed to come down. You're going from 2 billion to 3 billion. You're supposed to go from 16 to 12. You're not supposed to go from 16 to 38. That's like double positive. That's like, wait, you're bigger and you're growing faster. Your product's really, really good. That's my conclusion. Your product's really, really good. So anyway, I had a conversation with them, and we plan to get together this week again. Now back to NVIDIA and the timing of it all, right? Is when we talk about the AI build out, a hard question to answer is the build out going to last another year, another 5 years, another 20 years? But at some point it's going to stop. They're going to have it built, right? You would think, or all these businesses are going to go bankrupt. If Meta, and even though Meta, Google, Amazon, and Microsoft have so much money, if they keep spending at the rates that they're spending, they're going to really start to suffer, because they're like, oh my God, we spent too much money on the data center, I would think. And their revenues have to be going up in the same proportion as their spend, or even accelerate, or else they're going to get themselves into trouble. So the timing is going to be important, which is, for how long will they continue to grow? NVIDIA will be. So that's what I would focus on in order to be able to forecast, hey, they're going to keep growing for a year. They're going to keep growing for 5 years. They're going to keep growing for 10 years, which would be completely different than semiconductor. Semiconductor cyclical. You have boom followed by a slowdown, boom followed by a slowdown. It's cyclical. It's supposed to be. And we'll see what happens in this case.
What other semiconductor companies can rival NVIDIA? I think that's what.
None. But look at the forecast here, right? Here we have a revenue forecast on NVIDIA. We have 67 analysts putting their 2 cents into it. And the furthest year out, and they have a year that ends January 26th, 2026. So we're already in this year. And as we go out here, you see that growth is slowing in the outer years. So this is rational. You would think this is going to happen. Now, the timing here, right? It's a big difference. Like if all of a sudden they stop growing in 27, this stock's going to suffer. But if, let's say, the opposite is, no, they keep growing at 30, 40% into 2029, the stock's going to be worth more. So that's part of the answer to, is NVIDIA going to go up or down? Are their revenues going to keep going up at the rate that they're going up?
Yeah. They did have major growth this past year. But remember, and you see in 2023, they were flat.
I know.
Which was crazy. I remember that. And I was saying, but the stock, everybody keeps buying a stock. And I totally missed it. I was like, this makes sense to me. Like,
well, you could have told me 100 times, no, they're going to grow at 125%. And if you look at the quarterlies here, it's like, I don't get it. I'm like, I'm not seeing it.
Okay.
Back here, the growth here, a lot of it was crypto, because cryptocurrency miners, like the Bitcoin miners, they use NVIDIA GPUs to try to earn Bitcoin when they validate the blockchain. So that part of that growth was crypto. The original use case for NVIDIA was video games, because they accelerate graphics.
Yeah.
And gamers would want the accelerated graphics.
Data centers just blew up, I guess, so much. And actually, I think they had pulled back in gaming. It actually fell or barely grew, but data centers like tripled or something. And that's where all the growth came from.
Mm-hmm. Yeah. So this is, oh man, I have no idea what's going to happen with NVIDIA. I tried to put together a forecast that I think is rational. And I just, it's my best guess is how I would say. My analysis on NVIDIA is this is my best guess. This is not pure science. This is art and science. And I put together the best forecast I could. This is, to me, realistic, and it's just priced too high. But the stock's going to do what the stock's going to do.
That doesn't mean anything. When you can, these models, like who could have, it's so hard to predict the future, especially. Yeah.
Yeah.
As you guys know, it has nothing to do with fundamentals. It's supply and demand. So something can go up, like a stock like GameStop can go up 10,000% just on people buying it.
Yeah. I agree. And I think
in the short term, in the long term, fundamentals should play out.
Mm-hmm.
So in 10 years, we'll find out the true story. But now we don't know.
You're absolutely right. There's only one NVIDIA, only one. If you want to buy it, you have to pay. You have to pay $173 per share. And knowing that it's gone up 1,270% in the last 5 years. Not the perfect stock for somebody that's 75 and wants a low risk portfolio.
Right.
It's for a different investor.
Yeah. But even if I told you about NVIDIA in 2020, I mean, what did it go up? 20x since 2020. So even though I told you, how much money could you possibly put into it? Like, you're not going to put like your life savings. Say your life savings was 100,000. You're not going to put it all into a stock. So maybe you put 10,000 into it. So it's just, and you probably would have sold way before it came to this level,
right?
Because if you put 10,000 and that turned into 120,000, and then in 120 went down to 70, when you probably would have sold at 70, or once it hit 100, like that's
right.
People, yeah.
See, back in 2020, you would have told me, or I would have told you, buy NVIDIA because it's really going to go up. And back then, right, 2020, you're buying into a company that its primary market is gaming, video gaming. So it's not like mission critical, but they're the number one gaming accelerator. So gaming. Oh, and by the way, it's used for Bitcoin, which is kind of like whoa, off the deep end of risk there. So your primary drivers are going to be gaming, the success of Bitcoin, and then AI. And you're like, what are you talking about AI? What is in 2020? What's coming with AI? I have no idea what you're talking about. So your whole thesis is built on three drivers that are the most solid one was gaming, video gaming. Bitcoin, you have to a lot of people don't believe in, even today, 2025, a lot of people are like naysayers of Bitcoin. In 2020, like a fraction of 1% kind of understood what Bitcoin was. So that was an iffy proposition. And then AI in 2020, I wouldn't have believed anybody that said, oh yeah, in 5 years, we're going to be so crazy about AI. I'd be like, yeah, I don't believe it. So that's why the investment was genius for whoever did it. But for me, I'm by the way, I've worked in technology, but I'm older, probably not as visionary anymore. So it's not like I'm the dumbest guy on the planet when it comes to semiconductor software and so forth. Mm-hmm. And I just didn't believe it. A lot of institutional investors didn't believe it. Now they do.
Yeah, it's they proved it, and that's all you can do. I mean, a lot of people talk, and it's mostly talk until it's proven. And Amazon and Tesla, they would talk too, and they were like, these stocks, they lose. I watched a few YouTube videos recently with Jeff Bezos from like the late 90s, and then like the reporter was asking, but you how much did you profit last year? Oh, we lost $1 billion. They're like, isn't that a problem? And he's like, no. He's like, because we know we're investing, we're growing, and he explained it, and it sounded good, but I could see like me watching that video in the '90s. I'm like, but you lost $1 billion. Like,
Yeah.
how and sell books? Like, I don't get it. But I think that he's done pretty well. So yeah, it's yeah. What's the next one? We gotta move on.
All right. Let's talk about, there was a request by one of my channel members to look at Valaris. Valaris is with its subs provides offshore contract drilling services in Brazil and UK. And so these guys do drilling services. So they do platforms. Let me make sure I got the right symbol. It was Noam. So
pretty small company, 3.3 billion.
So Manoj Pabre, big investor, bought big into VAL. I think I've got the symbol right. Worth taking a look. All right, let's take a look. I'm not. So these contract drillers are not my favorite investment. But let's take a look at this one. Let me save my bias for later. And year to date, it's up 14%. Over the 1 year, it's down. Oil prices are not flourishing. If we look at oil prices, a few years ago, they were going off the charts. So here's Brent crude. I'm going to look at the 5-year chart, and you're going to see the oil price 3 years ago was really high. And when oil prices are really high, see how it went up? It was up at $119 per barrel. We're at $67 per barrel. So that's not quite half, but it's like 45% less. So that means 45% less revenue, 45% less cash flow for an oil company. So are they eager to, hey, let's go drill offshore and spend some money trying to find oil? And no, that's the opposite. And that's where you see this stock's really sold off. Okay, that makes sense. This is all rational. Oil prices are high. Oil companies are calling up Valaris and saying, hey, how quickly can you start exploring for oil off the coast of, I think it was South America, right? Brazil. How quickly can you do that? Because oil is at $120 per barrel. That is rational. So they made lots of money. They're like, oh man, Chevron, Exxon, everybody's hiring us. And then oil has dropped in price and wham, it's come down. Now it's caught a little bit of a rally. All right, cool. So these guys are going to be cyclical based on oil price. It is up 123%. That is a little bit of a surprise, but I know why. Is oil during COVID actually went negative, which means they didn't have enough storage. So they were in a negative per barrel price
position. Contract negative. Yeah.
So if you're comparing to COVID days, which is exactly what we're doing here, you're going to get a very good compare because it was like the sky had fallen on the oil industry. All right. So that's where we are there. It's $3.5 billion market cap, small cap. Revenue is 2.46. P ratio 12, forward P 24. They are growing. Look at that. So they're getting hired to do jobs to drill offshore. That is good. That's good growth.
It probably through acquisition, but
could be.
But yeah, it's growing. Whether it's through acquisition or organic, you want to see a company growing.
Now, these guys are like a contractor, right? So if you're drilling, you're hiring people, you're paying money for equipment, you're running the equipment, you're using energy to run the equipment. You have to either lease out boats, ships to get all the equipment out there. So there's a big variable cost. Let's take a look at gross margins. So here's the gross margin. Wow, look at that. So 13%, and their gross margins have really increased. Why did the gross margins increase so much? Maybe they did acquire a better business with better margins.
That is pretty well. Their revenue grew, so I guess when revenue grows, your margin should grow. Is that right? Yeah, because you're covering your fixed costs. But it is pretty significant growth, which and oil prices have come down, but they're not as correlated as like a downstream company, or upstream company. But yeah, that is kind of surprising.
They're a contractor, so whether per barrel oil is selling at $150 per barrel or at $50, they get paid the same amount. They're like, hey, we'll drill, we'll finish that project for $1 million. Whether oil prices are high or low, it's $1 million. It's not based on the commodity.
Like a midstream company, they have fixed contracts, but if they're contracted with people, the people they have contracts with, if they have deep pockets, like oil prices are high and they have more money, then they're more likely to get more contracts. But if those companies when oil prices come down, then those companies have less money and they have less contracts to deal with. So they're indirectly affected by oil. But that
so they may have had an acquisition which causes jump in revenue, and because the revenue is supposed to be flat in 25 and 26, which this is rational because you don't have high oil prices. Again, if we start seeing $100 per barrel oil price, yeah, you're going to see a lot more demand of these guys, but we're not there. And I don't think we're going to get there for a while. So this one here, let's look at their cash flow, and then we'll look at Padre's portfolio. I don't like contractors. I don't like companies like this because their business is very cyclical. Their margins aren't very good, even though these margins have increased. They've increased to 31 gross margins. Their profit margin's 11. That's pretty good, by the way, for a contractor. But I mean, we can go to Meta, and it's got margins that are like awesome, like 80% gross margins, 30% profit margins. That's what I'm looking for. 9.44 free cash flow margin. That looks pretty darn good. What the heck happened in the trailing 12 months that made them that much better?
That's the first year they had positive free cash flow was trailing 12 months. It was always negative before that.
All right. So it's too much curiosity here. What the heck's going on over at Val? Maybe this is the next NVIDIA-like investment.
But when I go back, their revenue in 2015 was double it is now. So they must have. I'm looking at it simply Wall Street. It just seems like different numbers than you were looking at.
So just looking at some of the news, so they were awarded some contract there. No, nothing
This
there.
is a Bermuda-based company. I wonder, they must report in U.S. dollars.
Mm-hmm. Trying to see if they have an acquisition that they announced, and nothing. Okay. No acquisition on their earnings or their press releases. They bought more equipment. Okay.
So from 21 to 25, their revenue did grow double from 21 to 25, as we saw. Their current revenue is $2.5 billion, trailing 12 months.
Mm-hmm.
But back in 2015 and 2016, it was over 4 billion. So they dropped off a lot from that
And
point.
they have taken on debt. So we're going to look at their debt next.
I wonder why their revenue was cut in half. I mean, oil prices.
Huh.
Yeah.
All right. So there was no acquisition mentioned in the last 2.5 years of press releases. So I'm going to say that based on press releases, they grew organically. And let's take a look at. So we've got. Let me make this bigger. So this is statement of operations. Here's their revenues. Okay, total operating revenues.
Okay, so according to Google, they had acquisitions in 2011, 2017, and then they merged with the company Rowan Companies in 2019.
Okay, so that's 7 years ago, right? So
yeah, they don't have, but they did have.
Look
some,
at their
I don't know.
Look at their contract drilling expenses went down like 47 million. So that's a little bit of why their margins are expanding, while their revenue increased a little bit by 5 million. Okay.
Yeah, that's a good sign. I don't know how they did that, but they did it.
They're probably using AI for their drills.
Maybe.
AI's running the robots are running the drills now, not guys. All right. So if you ever want to see a great movie about the oil business, is There Will Be Blood with
Daniel
Day-Lewis. Yeah. Have you seen that movie?
Yeah, it's a great movie.
It's a masterpiece.
Yeah, brilliant acting.
Okay, so long-term debt, $1 billion. So you have a $2.5 billion market cap company with $1 billion of debt. So that is one thing to consider is you got a lot of debt involved. Okay. All right. So just to give you kind of a general, opinion on this is, so their cash flow numbers, right? You don't have a trend here. So it's kind of a guessing game, right? It's not like they went from, negative 80 to even to positive 20 to positive 232, which would give you some sense of a trend. Here it's like all over the place. This business is maybe worth 2 to 3 billion, and that's it for me. I don't see the upside. Oil prices can triple, and these guys don't benefit from it. They get contracted more often. Hey, we want you to drill more wells. Got it. But they don't, it's not like a Occidental Oil. If oil prices triple, Occidental Oil will go up to the moon. They'll be like, cool, we're going to make so much money because we get paid per barrel. These guys get paid per project. So this one here is just, there's nothing there for me as an investor. And I know them really well. I'm trying to provide just a clear opinion on this, not to debate or argue, but just to express my opinion on it. So this is Pabray's investment. This is a super investor. Right now he owns Valaris.
There's a lot of insider buying on Valaris, by the way. I just looked in the past year.
I've bought AMR, which is an investment I've made, and I got the idea of looking at this guy's portfolio. But these guys will make a lot of money if the commodity price for metallurgical coal goes up. These guys will make a lot of money. That's why I bought that one. This one is not my cup of tea. I guess
So it looks like Valaris did sell part of its business because in 2014 they had 8,500 employees. Now they have 4,100. So the employee count was cut in half in 10 years. So they must have. I don't know if they did a divestiture or they just laid off the division. I don't know exactly what they did. But yeah,
I have to say on
but that doesn't. What's that?
No, finish your thought. Sorry about that.
I'm saying it is hard to, like, when you look at a company that was cut in half, maybe it was split into two companies, or maybe they just laid off a division. So you have to just hope management is doing that to improve the profitability of the company in the long run. So if you have confidence in management, it could be good when a company lays off employees because they're trying to really tighten up and grow their more profitable divisions. Yeah.
Just when I look at Valaris, right, it's not in an industry I like. Okay. I'm an oil investor. I own Chevron. I own Occidental. And I did work at an oil company as a corporate accountant. I did kind of go through a couple of years of understanding when do we make a lot of money, when do we lose a lot of money, where are operations most profitable, and so forth. And Valaris is a contractor, and they're always just going to make a reasonable margin, a reasonable profit, but never excessive profits like Occidental Oil. So it's not my desired industry. Second, valuation. I just don't see that the company is overly discounted. So this one here would be a pass. I probably wouldn't really involve myself in it. It doesn't have attributes that I'm looking for. So that's Valaris. All right, next one. Let's talk about United Healthcare. I really want to get your opinion on United Healthcare because Warren Buffett bought this stock. Michael Burry, the Big Short, bought this stock. David Tepper, who's killing it this year, he owns the Carolina Panthers football team. He bought the stock. So is the great Scott with Scott's Stock Due Diligence interested in this stock?
Yeah, I mean, I think it's it's always hard because when a stock goes down, like, psychologically, it's hard to buy it, even though you should buy it, because the further a stock goes down, the more appealing it should be, right? And when it goes up, it's like we want to buy it. We want to buy Nvidia when it's its all-time high. So it's like the opposite. Only with stocks. Nothing else in the world is like this. Because if you want to buy a home in your neighborhood and you can't afford it because the house is $300,000 and your budget's $250, and then you find out they lowered the price to $250, you buy it and you're excited because you got a good deal. But it's the opposite. When stocks go down, we think, oh my God, run for the hills. This is a bad deal. Yeah. But we should be thinking like Holmes, like we should then want to buy it. So I do think it's a great company. It's so big, it's powerful. I think when you see that, like, these crazy markets, I mean, he got killed, which is ridiculous. I mean, you don't really hear that too often, the CEO, and other crazy stories that bring the stock down. It's a good time to buy. And I don't know why I'm hesitating to buy it myself, but
here's one of the things that is interesting.
I need to look at the fundamentals more, and we should do that right now.
Yeah, I'll lead by showing you all my analysis. Yeah. And FYI, I've been talking about United Healthcare for 3 to 4 months. I've been talking I owned United Healthcare for years. I sold it early 2022, late 2021, after owning it for a long time and doing great with the stock. I was like, man, this company's great. And the reason why it kept going up was good revenue growth. So look at this chart, right? This is a very good stock. I don't think anybody's going to argue.
To its 2020 level, which is,
it's like, this is what I'm looking for. This is what I like right now. I thought it was getting a little pricey, so I sold it and I moved. I sold about $100,000 of stock. And I'm like, cool, mission accomplished. I started buying Elevance and I diversified further because I thought, okay, the stock's really done well. Okay, great. Now, this is a business that continued to grow. Okay. It just got overpriced because everybody was so darn comfortable with it. It's kind of like a very easy stock to buy when it's doing this. And so many people use United Healthcare insurance. I've been using United Healthcare insurance to raise my family for more than 20 years. My wife loves United Healthcare. She's talked to them 100 times. And at times they make you submit more information because they're like, what do you mean one of your sons needs yada, yada, yada? Yeah, he needs it. Here's a doctor's note. More recently, our healthcare bills for a particular purpose is we've probably submitted $5,000 of extra healthcare that one of us needed. You know, they ask questions, but they're supposed to ask questions. They're not like, oh yeah, cool, no problem. You needed some horoscope, teller to tell you what's going to happen with your illness. No problem. We'll go ahead and reimburse you. So all kidding aside, they just run their business and we've been, a happy camper. In fact, my wife would not like to change insurances. She really likes United Healthcare. She had a different health insurance, which I won't name. And so we were really happy with it. Now, fast forward, you would think, wow, look at this drop. Okay. Obviously the CEO being murdered. I think this was the drop back here. Okay. That was a negative story, but this one's the one that really just was like, oh, this is an opportunity. And they've had turnover at the CEO role because the CEO that replaced the one that got murdered, he was fairly old and he decided, you know what, guys, I'm not going to be the CEO forever. And in fact, I resigned for personal reasons. He was probably older and like, hey, I was planning to retire and then somebody murdered our CEO. Well, I love the company, but I have plans with my life. I wanted to sail around the world with my wife. I wanted to, who knows, whatever. And he's like, I'm going to go do that because that was my initial plan. So that was a bad news story. And then the management team that came in, they hired their old CEO to come back, similar to Disney. Disney did the same thing. And he kind of just emptied the kitchen sink of bad news on the earnings call. Now, looking at the company, revenue continues to grow every year. Sign of a good business. And look at this trailing 12 months at 10%. This is a massive business, $422 billion. 10% growth on that is excess of $40 billion added to the top line. That's a strong business. So this chart is a chart of opportunity. Business is growing and it's doing this. And I think that's what Warren Buffett says. The stock market's crazy. In a department store, when they put things on sale, people run in the department store to buy, at a better price. Stock market's different. When stock prices get discounted, especially get discounted by high amounts, people run out of the store. They're like, oh my God, we're out of here. So that's what they've done on United Healthcare. And now that you've seen big investors, Warren Buffett, Burry, and I can kind of show you, and they're not the only ones in the stock either. I mean, this stock has got a population of super investors, 19 of them total. This guy's killing it this year. He added 1,300% to his position. So he's putting $764 million on the line. Burry, Buffett's in here somewhere. Warren Buffett, he's putting, Tepper, get out of the way. I'm putting $1.5 billion of capital into. Man, Warren Buffett's got a lot of money. So there's some big money going into United Healthcare. And when I value the stock, I think this one is going to go back to $600 per share, which is that was their stock price within the last year. So when I started, you know, this has been my valuation through it all. I think it's worth $494 per share. Now it's discounted 38%. It's had a nice run up over the last couple of weeks. It's up 15, 20%. So this one here is kind of like, how do I best describe it? It's obviously a stock to consider, but I would go further and say it's an obvious opportunity. When that much super investor investment goes into a stock, you look at the fundamentals, they continue to grow. The problems they have are not like structural, like, hey, their top line revenue is going down because customers don't like their service, or their service stinks, or their product stinks, right? No, it's more of, hey, somebody murdered the CEO. That kind of kicked off a bunch of bad news and a lot of criticism of the company. Well, that's kind of temporary. You don't buy a business because you're buying the CEO. You're buying the business that is run by a good management team. So that's United Healthcare, my analysis of it. They have terrific cash flows. They have good earnings, and combined drive a very good valuation.
Yeah, it looks good on all fronts. Let's all jump in.
Well,
I think
we never provide financial advice. We're just providing our own personal perspectives and opinions. And in my case, I share what I'm buying and selling. Yes, that's United Healthcare.
Okay.
All right. So let's go over Zeta. And Little J had a question, a comment. Little J.
Yeah, I got to log off in like 5 minutes.
Okay.
But yeah, let's
handle these two questions and then we're out. Yeah. So Little J, you mentioned Meta buying opportunity. So anything I see similar opportunity, United Healthcare. It's, if you look at how Meta was sold off and it was like, market's crazy, and then it took off, United Healthcare. That's what I'm talking about there. So the next one is Zeta. Do you still think Zeta is a buy? Absolutely. Continue to buy stock in Zeta. Zeta is a software company in the ad space, ad tech, excuse me. They compete against AppLovin, but the valuation on Zeta is really good. They're growing really well, and they're smaller than AppLovin. What I like is their size. Their market cap is 4.6 billion. In a smaller market cap, they can go to 10 billion, double my money. Great. And they're still just 10 billion, where AppLovin is a great business, but they're already at a market cap 148 billion. If they were to double, they'd have to get to nearly 300 billion. That's a lot of capital that it's necessary to have AppLovin stock really move. I still think AppLovin's a terrific business, discounted by 24%. So the answer is I continue to buy Zeta. Yeah, I've got a small position and I'm adding shares.
Yeah. It's down 50% since November, Zeta. And its revenue is high as ever. Free cash flow is high as ever. So why the sell-off? I haven't been following the stock really, so I don't know why it's down so much.
Mm-hmm.
There must have been was it overvalued, I guess?
Well,
November?
Short-term stock market is irrational at times, and long-term, our job's to find the stocks that are priced wrong and buy them. So I know you got to run, so I think we answered the two open questions. Thank you very much for streaming with me. I really appreciate it.
Oh yeah.
And wish you a nice weekend, what's left of it. And let's stream again soon, maybe in a couple weeks.
Yeah. Okay. Thanks everyone. Talk to you later. Thanks, Victor.
All right. We'll see you, Scott. Take care.